Hey, crypto enthusiasts, welcome back to our channel. Today, we're diving deep into the buzzing world of Bitcoin and the much-anticipated Bitcoin exchange-traded funds, or ETFs. These financial instruments are making waves in the financial market, and for good reason. The future of Bitcoin is a topic that has been stirring up a storm. It's a currency that's been on a roller coaster ride ever since it was first introduced. But now, with the advent of ETFs, Bitcoin seems to be entering a new era. The anticipation is palpable. ETFs, for those of you who might not be familiar, are a type of investment fund and exchange-traded product. They are designed to track the performance of a specific asset or index. Bitcoin ETFs, therefore, track the price of Bitcoin. They provide a way for investors to get exposure to this digital currency without actually having to buy and store it themselves. But why is this important? Well, the introduction of Bitcoin ETFs is seen by many as a major step towards the mainstream acceptance of Bitcoin. It's a sign that traditional financial institutions are starting to recognize the value and potential of this digital currency. But not everyone is on board with this optimistic view. There's been a lot of chatter about a possible 30% drop in Bitcoin prices post-ETF decision. The skeptics argue that the introduction of ETFs could lead to increased volatility and potentially even a market crash. But hold on. We've got some compelling reasons to believe otherwise. While it's true that the introduction of ETFs could lead to some short-term volatility, we believe that the long-term outlook for Bitcoin remains positive. The potential benefits of Bitcoin ETFs, such as increased liquidity, price transparency, and lower risks, could attract a whole new class of investors. This could potentially lead to increased demand for Bitcoin, and thus a rise in its price. So while the future is always uncertain, we're confident that Bitcoin has a bright future ahead. Now, there's been a lot of chatter about a possible 30% drop in Bitcoin prices post-ETF decision, but hold on. We've got some compelling reasons to believe otherwise. First up, let's talk about the big players in the game, the long-term Bitcoin hodlers. These are the individuals who are in it for the long haul. The ones who remain unfazed by the market's ups and downs. They've been a part of the Bitcoin journey from the start, or joined along the way, and are in no hurry to jump ship. They're the believers, the visionaries, the ones who see Bitcoin not just as a digital currency, but as a revolution that's changing the face of finance as we know it. Long-term hodlers currently make up a substantial part of the Bitcoin market. In fact, they account for an impressive 70%. Yes, that's right, 70%. These hodlers are not swayed by short-term market volatility. They're not interested in the quick buck. They're here for the evolution, the potential, the promise of what Bitcoin could mean for the world. And their influence? It's significant. With such a large portion of the market, their actions, or rather their inaction, can have a powerful impact on Bitcoin's price. When they hold, they create a sense of stability. They create a shortage of available Bitcoin, which can drive up the price. It's simple supply and demand. But it's not just about the economics, it's about the message it sends. Every hodler is a vote of confidence in Bitcoin. Every hodler is a statement that they believe in the future of this cryptocurrency. And that kind of belief, that kind of support, it's infectious. It encourages others to join in, to become hodlers themselves, further strengthening Bitcoin's position. But it's not just about holding, it's about understanding. These long-term hodlers, they've done their homework. They've looked beyond the hype and the headlines. They've studied the technology, understood the potential, and made an informed decision to be a part of this journey. They're not just investors, they're advocates, champions, ambassadors of Bitcoin. So, as we look to the future of Bitcoin, it's clear that these long-term hodlers will play a central role. They're the steady hand in a volatile market. They're the calm in the storm. They're the ones who see the potential of Bitcoin, who believe in its future, and who are ready to ride the wave no matter where it takes them. These folks have been holding on, patiently waiting for their moment in the sun. And guess what? When BlackRock speaks, the market listens. This colossal asset management firm, a titan in the financial industry, was quite optimistic leading up to January 10th. They even went as far as to hint that approval of the much-anticipated Bitcoin exchange-traded funds was imminent. Now let's shift gears and talk about fees. Yes, they're not the most thrilling part of investing, but they're an essential piece of the puzzle. Big names like BlackRock, Invesco, RK Invest, and VanEck are preparing to enter the fray with some competitive ETF fees. We're looking at figures as low as 0.2% for the first 12 months. To give you a bit of perspective, that's considerably lower than the 0.95% charged by the largest Bitcoin futures ETF. So, Why are they so intent on undercutting the competition? It's all about the scramble for assets. The rivalry among these ETF providers is reminiscent of the fee wars we've seen in the broad market index ETF world. Consequently, rejection at this stage seems highly unlikely. These ETF providers have set ambitious asset acquisition targets. They're anticipating billions of dollars flowing into Bitcoin within a year. BlackRock, Invesco, and RK alone could bring in a staggering $11 billion. That's not just pocket change. And here comes the exciting part. The approval of these ETFs signifies the formal recognition of Bitcoin as a legitimate, regulated investment asset. It places Bitcoin on an equal footing with gold, a market cap heavyweight. Therefore, we can brace ourselves for billions of dollars pouring into these ETFs and naturally an uptick in interest from the crypto-savvy crowd. So rejection at this point seems highly unlikely. Now here's the exciting part. The approval of these ETFs marks the official recognition of Bitcoin as a legit regulated investment asset. With the green light from regulatory bodies, Bitcoin is no longer the Wild West of the investment world. It's not just a playground for tech enthusiasts and risk takers anymore. It stands shoulder to shoulder with traditional investment assets like stocks, bonds, and yes, even gold. This recognition has wide-ranging implications. For one, it legitimizes Bitcoin in the eyes of traditional investors who've been watching from the sidelines, unsure of dipping their toes into the crypto waters. With the stamp of approval from regulatory bodies, these investors may now feel more comfortable embracing Bitcoin. But there's more to it than just gaining the confidence of traditional investors. The approval of Bitcoin ETFs opens the floodgates for a potential inflow of billions into Bitcoin, and we're not talking about small change here. We're talking about serious money that could boost the Bitcoin market significantly. This influx is likely to come from both individual and institutional investors. Individuals, now reassured of Bitcoin's legitimacy, might decide to allocate a portion of their portfolio to Bitcoin ETFs. Institutional investors, on the other hand, might see Bitcoin ETFs as a safer and more regulated way to gain exposure to the Bitcoin market without the need to hold the actual asset. And let's not forget the increased interest from the crypto-savvy crowd. These are the folks who've been in the crypto game for a while. They understand the ins and outs of the market, and they know a good opportunity when they see one. With the approval of Bitcoin ETFs, they might see an opportunity to diversify their crypto holdings and potentially reap higher returns. So, brace yourselves for billions pouring into these ETFs and, of course, increased interest from the crypto-savvy crowd. The landscape of the crypto world is changing, and Bitcoin, with its newfound recognition, is leading the charge. Wrapping it up, with the tailwinds from ETF approval, we're not buying into the strong selling pressure predictions. Consider the current Bitcoin dynamics. A large majority, about 76% of hodlers, are in it for the long haul. While short-term traders may cause temporary dips, history has shown these to be little more than blips on the radar, preluding a strong rebound. So let's gaze into the crystal ball, shall we? Given the current market climate and the impending influx of institutional money, we're predicting a potential 25 to 30% surge in Bitcoin's price. This could see Bitcoin reaching an impressive sum of around $60,000 in 2024. But let's not get too carried away. It's crucial to acknowledge the potential threats looming on the horizon. Regulatory pressures are a constant concern in the crypto world. The global economic backdrop is also a factor that could sway Bitcoin's trajectory, for better or worse. Yet despite these potential pitfalls, the future of Bitcoin looks promising. The official recognition of Bitcoin as a legitimate, regulated investment asset is a game changer. This validation puts Bitcoin on the same playing field as gold, opening the floodgates for billions of dollars to pour into Bitcoin ETFs and sparking increased interest from the crypto community. In conclusion, 2024 might just be the year Bitcoin steals the limelight. Much like the proverbial phoenix, Bitcoin could rise from the ashes of skepticism and uncertainty to new, unprecedented heights. Remember, the world of crypto is unpredictable and volatile, so keep your eyes peeled, stay informed, and enjoy the ride. That's a wrap for today. What are your thoughts on Bitcoin's journey in 2024? Share them in the comments below, and don't forget to like, subscribe, and hit that notification bell for more crypto updates. Until next time, happy hodling.